The bucket plan is a 3-bucket approach of segmenting your money based on the purpose and time horizon before you will need it. Essentially, we are buying income or a time horizon to invest the difference for long-term growth. Let's start with bucket 1, the now bucket. This bucket is designed to cover expenses in the first year or 2 of retirement, such as cars, home repairs, and an emergency or comfort fund. This bucket has little or no exposure to the financial markets. Returns will be minimal and likely not keep pace with inflation. So we don't want to have more money than necessary in bucket 1. This is typically the money in the bank. Next, we have bucket 2, the soon bucket. This is the money that we may need to access sooner rather than later, so it should be invested for growth, but conservative growth. This bucket helps address 2 of the bigger risks in retirement, inflation and sequence risk. By choosing the conservative investments, average returns should be expectedly higher than in the now bucket. This growth helps offset the rising cost of gas, groceries, and other daily living expenses, providing a baseline of income and an inflation hedge where we can draw a little more as the years go on and things get more expensive. And by investing conservatively, you avoid the risk of taking out money at a market low or sequence risk, as this account should not be exposed to extreme market fluctuations. Finally, we have bucket 3, the later bucket, for the last phase of retirement. This bucket is designed for long-term growth and legacy planning. Since we have positioned money conservatively in the now and soon buckets, we now have the confidence for bucket 3 to invest in higher growth opportunities and longer term commitments. The biggest misconception I see is people think that legacy planning is just for the kids. However, legacy planning is actually most important for the surviving spouse. Going from married to single tax brackets, the standard deduction is cut in half. Marginal brackets shrink and overall taxes go up dramatically. Added to which, losing one of the 2 Social Security payments and potential pensions, income is almost always reduced as well. So taxes go up and income goes down for a surviving spouse. In conclusion, the bucket plan is a way to holistically structure your savings to tackle today's market challenges while meeting your immediate, short, and long-term goals. To learn more about creating your own bucket plan, call Harford Financial Group today.